Hello, this is John Kvale, and this is our fourth quarter newsletter review. At the beginning of this year, I went to a format that's more like a podcast for those of you that just want to listen. It's also a video, but I'm verbalizing what we were thinking when we did the articles. So here we go. I'm going to jump right in. In this case, I've got a PDF up of the newsletter, which is soon to hit your box via regular snail mail. We like that for long time purposes here, and we still like to have paper in your hands for things like this. Okay, let's get to it here. So the lead article is price is what you pay, value is what you get. And this article, much like in our last newsletter, started out as a very small article and grew and grew and grew. So for those of you that are listening, I'm scrolling to page 2 because this is where the meat is. The meat is in the ratios. There is a ratio, the basic, most blunt ratio is called the PE ratio, and that is the price to earnings ratio. I talk about it here on page 2. The PE ratio of, in this case, I use the S&P 500. Its median mean for long-term average is around 15. It's currently about 25. There's a second ratio called the CAPE, which is the cyclically adjusted price earnings. Basically, it's a fancy word for saying 10-year average. So I also pulled that one out for the S&P 500. Again, long 10-year average is about 17. It's currently at about 31. High is representative of expensive in this case. So the higher the PE ratio, possibly the more expensive it is. We can talk about this at another time, but you can either have a reversion down in price or you can grow into that. Either way, when you have a high PE ratio, it may mean that gains may not be as dramatic moving forward. Now let's look to our friends across the pond. First, let's look to our friends across the pond in form of the world is a little smaller than it used to be. So I love this chart, and this is representation, and the verbiage I'm now on the third page for those of you that are listening to the newsletter, and what I have is a pie chart that's breaking down all of the world capitalization. I go into the verbiage and explain that basically years ago when we started, many countries, we didn't trade with each other. We were just countries that we tried to do as good with our natural resources as we had, and if we didn't have it, then we didn't use it or tried to get it someplace else and it was expensive. Well, capital has flown to other places. Now the United States, on this chart, I'm looking back at the pie chart, the United States makes up only 53% of the capitalization of the world. Why am I saying that? Well, if it only makes up about half of the world and we're only investing here in the United States, we're missing a whole bunch of other things. Now, some people can say, well, use any country, any big company as an example, and they do trade overseas. True, good point. The world is smaller and they do trade, but you're going to miss some companies that are just internationally only companies if you invest just in the United States. All right, my point, I'm setting this up. I'm going somewhere. So if the United States is only 50% of the capitalization, then it likely makes sense to have investments outside overseas. Now, let's fast forward to two things that affect using the same PE ratio and CAPE ratio for international big companies and international emerging markets. Their long-term averages are around 15 and 17 as well. Would you believe that they're currently 13 and 14? That doesn't mean that they're going to go up, but that just means there may be more value there. Secondly, behind this, what I'm showing is on the final page of this graph, of this article, is the United States currency, which had been a headwind by getting stronger, may be a tailwind now because it's getting a little bit weaker and it's not such a headwind. So I also did a blog post on this, and I did our monthly on this as well. So I'll leave it for that. But needless to say, a increasing value of the dollar is a headwind for international. A flat or decreasing is not a headwind. It could be a tailwind, as well as they may be finally getting out of their funk. And so where am I going with this? I'm rolling back. For those of you that are watching, I'm rolling back to the top of the next article. Where am I going with this? It makes sense to have international markets, and international markets may finally be catching up with us. Okay. There's an Equifax article in here, and this is a reprint of what I put on the blog, so I'm just going to touch on it briefly. And basically, don't freak out. It's okay. It's not a matter of if, it's a matter of when. If your information hasn't been stolen yet, It will. I'm sorry to say that. There's going to be a data breach somewhere. Just prepare, watch your stuff, monitor it, and we'll be fine. I apologize. I hope that doesn't hurt anybody's feelings, but it's the fact of the matter. It's just the way it's modern day body and climate. It's better than having a gun stuck in our face, but it does feel invasive when all of our information. For those of you that have been following me for a long time, 6, 7, 8 times probably have had all of my identity stolen. Never had a penny lost. So that may change by saying this, but I want to give you some confidence that just because our information may have been stolen doesn't mean we're going to immediately have a run on everything. Then another side article that starts on the first page, and I am going to scroll down to it, that starts on the first page of the newsletter. I'm back on the first page of the newsletter. We did 6 fun videos, 1-minute videos, unlike this one. This one is 6 minutes. I apologize, but 6 fun 1-minute videos. They reside on our YouTube webpage, which we're getting more and more people that are looking at. Thank you very much. And they also reside on our new webpage, our core webpage, JK Financial Inc., as well as in this blog post. All you have to do is search for videos. So we had a lot of fun. I've got 2 more that I want to do right now, maybe 4, that are how I use the cell phone frequently. Last but not least, well, second to last, app of the quarter, awesome. Dear friend showed me this app recently on a trip to Big Apple, and I just fell in love with it. I was at the airport putting all of my stuff in, and I was like, oh my gosh, how many different bonus points and how many different things can you have? You have a lot. One thing to say about this, the feature that I'm most interested in, I've not had any savings yet, but the feature that I'm most interested in is the price watcher. And so it'll watch for you. It costs $49 for that. It'll watch the prices of an airfare once you buy it, and then it'll ping you if it goes down and tell you to call the airline. So I haven't actually had that occur yet, but my friend who did that did, and it'll pay for itself. The reason I'm saying that is if you get that feature, it costs $49 a year. I also said that one drawback is it only works for one person, so a family of 4 could get expensive. But okay, last and not least, our parting thoughts section. We've got the parting thoughts is really a summary of everything, but I want to bring up something. We've got a big surprise coming out. Super fun. It's all new to us. It's something, not to let the cat out of the bag, but it's something that is, we've been noted as a firm. And I'll leave it at that. I can't go much farther than that. And also, we're so excited to have the Arboretum host our 22nd annual holiday party this year, the Saturday before Thanksgiving. We hope you can make it. It'll be fun. 1 to 3 is the actual party, and then everybody gets to go all over the park after that. So I ran a little long on this. I was pushing myself. I thank you all if you're still here and listening. I like to give some verbiage to what I was thinking when we did these and what occurs. It's a lot of fun doing these articles because as you start doing them, you kind of roll back the onion a little bit and they get more and more interesting. And sometimes this thing goes in a direction that I don't know it will. So we thank you. We'll see you at the beginning of next year as far as the newsletter. And we hope that you're sticking around to watch our monthly videos as well. And we hope you enjoy the new podcast format. Have a wonderful day and a good fall.